You're working on your boutique's bookkeeping and you realize you have this receipt sitting on your desk for something you bought for the business, but you paid with your personal card. Maybe it was back before you even had a business bank account or credit card. Or maybe you just grabbed the wrong card and swiped it while you were checking out at Target. Either way, now you're staring at this receipt thinking, okay, what do I even do with this? Do I just skip it? Does it not count since it didn't come out of the business account? Well, this is exactly what we are going to be talking about today. Let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello, and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be talking about what to do when you pay for a business expense with your personal funds. So whether that is a personal credit card, debit card, check, whatever the method is, but it was paid for with personal funds. So this comes up all the time, especially for boutique owners who are maybe newer to the bookkeeping thing. And there's really two situations where this happens. First is what I call the startup scenario. You're just getting your boutique off the ground. Maybe you didn't even have a business bank account yet, so you're just paying for everything out of your personal account. Your Shopify subscription, your LLC filing fees, maybe even your first round of inventory. All of those are still business expenses, so you still get to count them in your bookkeeping records for your business. And if you're already using a bookkeeping software like QuickBooks, it just means that you're going to have to manually enter them because they're not going to show up in your connected bank or credit card feed since it didn't go through your business bank account. The second scenario this might happen is a little simpler. Maybe this happens when you've been in business for a while and you have the business account, but you just accidentally swiped the wrong card when checking out. And I promise you are not the only one who has swiped their personal card when trying to pay for a business expense. But with both of these scenarios, it's generally the same fix. And the process I'm going to walk you through today is going to be specific for those of you that are using a bookkeeping software like QuickBooks. If you're tracking everything on a spreadsheet, really the concept is the same and you're just going to manually add those expense lines on your spreadsheet. But the step-by-step process that I'm going to be walking through today is specific to those of you that are already using a bookkeeping software like QuickBooks Online. So first off, I just want to say this. Paying for a business expense with your personal card is not a huge deal. You didn't mess anything up, and honestly, this is one of the most common situations I see with boutique owners. And there's just a completely normal, straightforward way to handle it in your books. It's not a huge deal. So if you've been avoiding this because it feels complicated, I just want you to take a breath because really it's not. There's just one extra step involved and I'm going to walk you through it today. But there is something that I do want to make sure I call out because how it is handled is going to be slightly different depending on how your business is set up legally. So, are you a sole proprietor or a single member LLC business? Or are you operating as a corporation like an S Corp or a C Corp? So that distinction matters here, and I'm going to walk through each scenario separately. If you're a sole proprietor or a single member LLC, this whole process is going to be pretty straightforward. Since the expense didn't come out of your business bank account or credit card, it's not going to show up in your bank feeds automatically, so what you are going to do is create what's called a journal entry. And a journal entry is just a manual way to record a transaction in QuickBooks when there's no connected bank transaction to match it to or to categorize in your bank feeds. So here's what the journal entry is going to look like. You are going to debit the expense account, which is just the category that the purchase belongs to. So if you were buying office supplies at Target, you are going to debit your office supplies expense account. If you made an inventory purchase, you're just going to debit your inventory asset account. So whatever you purchased, that is what you are going to be debiting in your journal entry. Then you are going to credit an account called owner's contribution. And an owner's contribution account is going to have the account type of an equity account, meaning that this type of account represents your personal investment in your business. So anything that is categorized to this owner's contribution, or also sometimes called an owner investment account, these amounts do not show up on your income statement as income. They show up on your balance sheet in the equity section of your balance sheet. And an owner's contribution is the account that just says that you as the owner put money into the business to cover this expense. So the journal entry is basically telling QuickBooks, yes, this business expense happened and the owner personally funded it. And that expense is now in your books. It will show up on both your profit and loss report and or your balance sheet, depending on the type of purchase that it was. Now, in this situation, do you have to reimburse yourself from the business? No, you do not have to. And a lot of sole proprietors and single member LLCs, they'll just let it sit in that owner's contribution account and call it a day. But if you do want to pay yourself back for it, you absolutely can. All you have to do is just transfer that amount from one of your business accounts into your personal account, and that's it. And when that transfer shows up in your QuickBooks bank feed, you can just categorize that transaction to owner's contribution as well, and then add a little note in the memo that just says, reimbursing owner for whatever that expense was, and that's it. There's no special rules. There's no additional paperwork. You don't need to consult with your tax preparer. You can just handle it like that and be done with it. Now, if you are operating as a corporation, meaning that you have either an S Corp or a C Corp tax status, the first question I want you to ask yourself is, do you want to reimburse yourself for this? Because this is something that will determine how this is actually handled. So decide for yourself, do you want to reimburse yourself for this, or do you simply want to get the purchase or expense recorded in your bookkeeping? If you don't care about being reimbursed and you just want to record it and move on, the process actually looks the same as what I just walked through for a single member LLC or a sole proprietor. You're going to do the same journal entry in QuickBooks where you are adding the amount as a debit to whatever expense account or inventory account that you purchased, and then you are going to credit owner's contribution. That adds the expense to your books, it's on your reports, and it's all accounted for. But if you do want to reimburse yourself from the business, this is where it gets a little more involved. So when you have a corporation, like an S Corp or a C Corp, you are actually considered an employee of your business, even if you are the only person, the only employee in your business. And the IRS has very specific rules about how owner reimbursements need to be handled so that that money doesn't end up getting taxed as wages. There's something that's called an accountable plan, which is basically a formal reimbursement policy that your business needs to have in place before you start paying yourself back for any type of reimbursements. And without it, the IRS could treat any reimbursements that you pay yourself as taxable wages, which we don't want to happen. So before you do anything about reimbursing yourself for any of these types of expenses, please go and talk to your CPA or tax preparer. Make sure you have that accountable plan set up first, and then use that to help guide you through the process on how you should be reimbursing yourself for these types of expenses. So the last thing that I want to say in this episode is, if this happens, don't let these pile up throughout the year. I know it's tempting to set that receipt on your desk and just deal with it later, but later can easily turn into 3 months later, and suddenly you're sitting down to do your bookkeeping at the end of the year and you have a stack of personal card receipts mixed in with business card receipts, and sometimes you forget what some of these purchases are. So it is so much easier to take the extra 5 minutes right then and there instead of trying to remember and reconstruct everything when you're just trying to get ready for your taxes. If you're already behind on this and you have a bunch to catch up on, just set aside a dedicated session to go through all of them at once, but before moving forward, try to make it a habit to get things recorded right away. So here's what I want you to remember from today. Paying for a business expense with your personal card does not mean that you lose that expense. It just means that you have to take an extra step. You need to do that journal entry in QuickBooks to get that expense recorded. Debit the expense account or the inventory account to represent whatever you purchased, and you credit owner's contribution. That expense or that purchase is now in your bookkeeping records, it's on your reports, and it's automatically going to be there in your reports when tax time comes. So don't skip it, don't set it aside, record it right away before you forget about it. And if these are types of the situations that kind of trip you up when you are working on your bookkeeping, or even if you're sitting there thinking, okay, but I still don't really know how to do a journal entry in QuickBooks, this is exactly the type of thing that we cover inside the Bookkeeping Made Simple for Boutiques membership. Inside the membership, I walk you through all of these things step by step in QuickBooks so you can see exactly what to click and where to go. No more guessing, no need to Google all of these questions, no frustration. You can check it out and join us at findingfreedomfinancial.com/membership. But that's all that I have for you today. Be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.